This conference will now be recorded.
Alright, so today we'll talk about asset accounting. Okay, so this asset accounting is a subledger account. Asset accounting, I say, subledger accounting. And as you know, any subledger will have a connection with main ledger with reconciliation, correct? So asset master data will be integrated with general ledger with reconciliation account. Okay, with reconciliation account, which means in the asset master data, there is a link which will connect to the reconciliation account. How this link will get established, we will see in the upcoming configuration. So there is a sequence based on which each asset record will get connected with a GL account, which is a reconciliation account. Okay. Now, so each asset will get its value decreased by way of depreciation. Okay. For every asset, we will calculate a depreciation, and this depreciation will reduce the value of asset. This is one point. And one more thing, asset will be uh, evaluated with different accounting principles. Different accounting principles. Example, Companies Act, Income Tax Act, your IFRS, US GAAP, etc. Okay, and you need to understand different methods for depreciation. Okay, when we talk about the different methods for depreciation, we need to understand how an asset will be depreciated and what are the ways. In general, we have three methods. One is straight line method. This is also called as SLM. And the second one is written down value method. This is WDV. And the third one will be useful life method.
Sir,
Yeah,
we'll discuss what is depreciation also, right?
yeah, we will discuss.
Okay, yeah.
Now, let us see what is this. This is at high level we are writing. We are going to discuss in detail about everything. Okay. and this is the second one, and this is the third one. To take an example, we are not talking from SAP point of view. Let us try to understand in general how asset accounting is performed and how different values are calculated. Okay, let's take a simple example. So, asset purchased on this date. Okay, in the same dates in all the methods. Okay, asset value, let's say 1 lakh. Everywhere, let me take the same value, 1 lakh. And then here, let's say useful life, like 5 years. Let me write everywhere, life is 5 years. And depreciation, let me write here 15% straight line method. Here also, let me put 15% WDV. Here, depreciation based on life. Clear? This is clear. You purchased asset on 1/4/2021. Value of the asset is 1 lakh. Life of the asset is 5 years. And depreciation is based on 15% straight line method. And in this second method, WDV, same values, but the change is in the depreciation. Here we are going to depreciate at 15% WDV method. In the third one, same values, we are going to depreciate based on the useful life. Now let's see how the values will get calculated, how it will affect. Alright, so this is the basic calculation so that we will revise how asset accounting, how depreciation is calculated, so that it will be easy for us to understand from SAP point of view, and it will be very easy for you to connect from accounting to SAP. Right, now let me write one more thing. Depreciation based on number of days. Here also and here also. What is this depreciation based on number of days and depreciation based on number of months? These two things you'll have to understand. Okay. So before we start the calculation, you need to understand the two things. Depreciation is always calculated on yearly basis. Okay. So we say depreciation is always calculated on yearly basis or annual basis. So you will never calculate a depreciation for a month. Depreciation is always calculated for a year and then posted on a monthly basis, which means here you are getting a depreciation rate at 15%, right? This 15% is not for the month. This 15% is for the year. So always you'll have to calculate a depreciation for the whole year and then arrive at the depreciation for particular month, either based on number of days in a year or based on number of months in a year. There are two ways or two methods to arrive at the monthly depreciation. So one is based on the number of days in a year or based on number of months in a year. So these two will result in a different number for a month, but at the end, for the overall 1 year, you will get the same figure, right? According to this, let's go with straight line method first. So key points that I need here is asset value is 1 lakh. Okay, I'm not writing what is this 1 lakh. You need to understand, right? 1 lakh is the value of asset, and the depreciation is 15 percentage annually. Remember, whenever the depreciation is based on the percentage, you don't need to consider the life. Okay, so if your depreciation is based on percentage, whether it is straight line method or WDV method, you do not have to consider about life. Life is only for the reporting purpose. You don't have to consider the life. Clear? Now 1 lakh and 15%, these are the only two things that I need. And one more important thing that I need is purchase date. This purchase date is also called as value date in asset accounting. This value date will have very important role to play in the asset accounting. So your whole depreciation is purely based and dependent on the value date. Okay. Now value date here is nothing but the purchase date, which is your 01/04/2021, which means you purchased in the beginning of the year. Correct? April is your fiscal year in India. So according to that, you purchased it on the first day of the fiscal year, which means your depreciation will be valid, or depreciation should be calculated for the total year. Now let me write annual depreciation is equal to 1 lakh into 15 percentage. Correct? Merit 1 lakh into 15 percentage will give you annual depreciation. So here you will get how much is equal to 1 lakh into 15 percentage, 15,000. This is your annual depreciation, which is depreciation for 1 year for 12 months. Normally, as per accounting, what we will do, we will have to record this depreciation on a monthly basis in the P&L account. Okay, so this depreciation is a profit and loss account. It must be debited in your P&L account on a monthly basis. So how do you arrive at the monthly value? You'll have to divide this 15,000 yearly amount either by number of days in a year or by number of months in a year. So that is the reason we have given two things here. Now let's say option number 1, monthly depreciation based on months. This is one option. Different color. Now how many months we have? 12, right? So it is straight away 15,000 annual depreciation divided by number of months in a year. Okay. Now what will be the amount here? 15,000 divided by 12. Correct? So which will give you is equal to 15,000 divided by 12, 1,250. This will be the monthly charge to the P&L. Correct? So for the 1 year, I am getting 15,000 according to this calculation, and this will be my monthly charge to the P&L account as depreciation account. Now, this is your first year. This is your first year. So let us talk about the second year. Now, what will be the second year? What will be the second year? So remember, if you look at this, what is this method? It is your straight line method. In the straight line method, depreciation is always calculated on the original value of the asset or net book value of the asset. There are two terms that you'll have to understand. So, for calculating depreciation for second year. For this, you need to understand few things. One is original value of asset. This original value is also called as APC. Original value or APC. APC stands for acquisition and production cost. And second one is net book value of asset. This net book value is called NBV. This net book value is NBV. Now, what is our method?
SLM.
Our method is SLM, straight line method. So if our method is a straight line method, second year depreciation must be calculated on original value of the asset. Okay. Used for SLM and UL methods. What is UL? What is UL? Useful life method. Okay. UL is your useful life method. Let me put this in one color. This net book value is used for WDV method. Useful life. Sorry, your net book value is used for WDV method. Let me put a different color for this. Yep. Let me remove the color. Clear? These one-liners you need to remember. Just try to understand these one-liners because these are going to play a very major role when we are starting asset accounting in SAP. Now, if your if your scenario is for straight line method, now depreciation for the second year should be calculated based on original value or based on net book value.
Original
Based
value.
on based on original value. Original value is nothing but
Yes.
cost price of the asset or purchase price of the asset. What is the asset that we purchased? What is the value?
1
1 lakh. So second year also you will have to calculate a depreciation on 1 lakh only. Again 1 lakh into 10 percentage divided by 12 months. You will get the same figure 1,250 per month. And yearly depreciation is again 15,000. Correct?
Yeah, yes. But
Am I right?
small doubt here. In Excel,
Yeah.
if we're using the 1 lakh as a standard value for second year, then how come the system will understand that the depreciation is already completed for 1 year and it is started doing working on second year?
So system will understand based on the moment you create the asset in SAP, you will have to give the value of the asset. You'll have to give
Value.
the life of the asset, and you will have to assign different parameters like depreciation key and life of the asset, depreciation start date. Based on that, system will start calculating automatically. For all these automatic calculations, we will have to perform various configuration settings. Okay, the moment you
Okay.
post the transaction of the asset purchase of 1 lakh, all the calculations will come automatically. If the asset life is 5 years, system will give you 5 years projected values just by one click. But you need to understand how system has proposed these values. For that, you need to understand these basic calculations.
So you are saying that when we create the asset master data, we will have a field called value date. From there, system will start digging the depreciation date, correct?
Correct.
Okay.
Okay. So what we will do is, once we understand this, whatever the asset that we draft here with our imaginary figures, same asset we will create in SAP for the same value. Then I will show you exact numbers will come in the SAP, so that you will understand how SAP is calculating asset values. That is very important in asset accounting. If you are able to understand how system is calculating the numbers, how system is posting the entries, how it is affecting your financials like trial balance, P&L, balance sheet, you are comfortable, you are very good at asset accounting. That is the only key skill that you need to gain from the asset accounting. Just understand the value flow. Okay.
Okay.
Right. So for the second year depreciation, since our asset is using straight line method, right, we need to take the same value, which means for the second year also you will get the same depreciation 15,000. Agree? Correct?
Yes.
Right? You will get the same value for the second year also. Let me write second year depreciation, again 1 lakh divided by, sorry, 1 lakh into 15 percentage, that is equal to 15,000. So second year also you are getting the same depreciation value. In short, in short, your straight line method will result same annual depreciation every year. Okay. If you have 10 years, for 10 years you will have same depreciation if your depreciation method is a straight line method or SLM. Okay. So there will not be any change in the depreciation. Whatever the value that you are getting in the first year, it will be the same every year. There may be a minor delta adjustments at the last year. Okay, if there is any here and there, that will be adjusted in the last year of the asset, but otherwise all the years will receive the same value of the depreciation in case of SLM. Is this clear now? Any doubt in this?
I have one doubt. In here in SLM, we are taking 15% depreciation for every year, correct?
Yes.
And the asset life is for 5 years, huh? Useful life 5 years.
If your depreciation is based on the percentage, you have to ignore the life. Don't consider the life. System will
Okay.
keep on applying the percentage until the asset value becomes zero. So this does not have any impact. Okay.
Okay. Suppose
Yeah.
15,000 is my uh, my asset value, my depreciation for asset for every year. Okay, for
Right.
5 years, it will be 75,000 plus 15,000 will make uh, 90,000. Okay, for seventh year, the depreciation will be at 10,000 only. It won't be at
Correct.
15,000.
Correct.
So,
That's what I said. And the last year, there will be the delta adjustment. Whatever is left over, so that will be posted in the last year.
okay, 10,000 will be depreciation, and the 5,000 amount, 5,000 will be will be moved to delta G.
No. This delta is nothing but the adjustment figure. Every year, according to 15%, should be 15,000. Correct?
Correct.
So this 15,000 will result at the end of a sixth year 60,000.
Yeah, sixth year will be 90,000. Okay.
Yeah, sixth year will be 90,000. In the seventh year, system cannot post to 15,000. Correct?
Correct.
Because the asset is left with only 10,000 value in it. So instead of posting 15,000, it will post only 10,000 because your your end result of your asset accounting calculating depreciation is to make the asset value zero. To make it
Okay.
zero, you don't need 15,000, right? 10,000 is the only value left in the asset. So system will post only 10,000. This 10,000 is the delta value. Delta is like the adjustment value, not
Okay.
the
Overall,
exact 15,000.
delta value. Huh?
Sorry?
Overall 10,000 is the delta value figure for last year depreciation.
Correct.
Okay. Okay.
Okay.
Okay.
Yeah. All right. Any other questions in this SLM before we proceed to the WDV method? All right. If no questions, so let me proceed to the WDV method. This is only the rough calculation that I'm showing. After this, we will take one Excel sheet. So we'll take a table, we'll calculate in the neat format where you will understand clearly. This is only for the understanding purpose, just to get an idea.
Okay. One more follow-up question with the
Yeah.
SLM method.
Hmm.
If system is posting a delta, if the system is adjusting the delta value in delta method, how do we know that the depreciation has been turned down to less value and it was made in the delta adjustments? How do we
In
understand that?
SAP, you will have the analysis where system will give you detailed breakup of every month, every year. Just
Okay.
by one click, you will get to know the complete picture of the asset, right from the
Yes.
start until the end. So you can
Yes.
see what is the depreciation that was captured on a monthly basis, what is the depreciation that was captured on the yearly basis. That will give you clear picture.
Uh, uh, okay, I understand the depreciation screen, but do we have a delta tab or something like that?
No, there is nothing called a delta tab. Delta is nothing but the adjustment figure. That is what is called as a delta figure or
Okay.
pro rata figure.
That is a terminology we are using. Okay.
Correct.
Okay.
So once we are on the SAP screen, I will clarify your question with practical example.
Okay. Thank you.
Okay. Yeah. Now for the WDV, what we need, we again need the same thing. 1 lakh is the asset value, 15% is the rate, and depreciation start date or asset purchase date is 1/4/2021. And what will be the annual depreciation? Same logic for the annual depreciation. It will be the same formula here also. Then you will get 1 lakh into 15%. So you're getting same 15,000 even for the WDV method for the first year. Correct? First
Yes.
year WDV is the same. And monthly depreciation. Let us understand the monthly depreciation. It will be 15,000 divided by 12 months. Correct? Will be
Yes.
15,000 divided by 12 months. Let me copy paste this. So that it will be 1250 here. Now, for calculating second year depreciation. Correct? Now these are all same. Let me put this. Now, for the second year depreciation here, what method are we using?
Return of value.
WDV method. For WDV method, you need to calculate based on net book value of the asset. Correct?
Yes.
So here you need to understand net book value or NBV is equal to asset APC value minus accumulated depreciation. Okay. What is the formula for calculating net book value?
Asset
Asset
value.
value. Asset value is nothing but APC value from SAP point of view. Asset value minus accumulated depreciation will give you net book value. Accumulated depreciation is nothing but if you are on this second year depreciation calculation, previous year is your accumulated balance. So how many previous years you have if you are on the second year? Only 1 year, right? So that 1 year depreciation will become your accumulated depreciation. If you are calculating on the third year, so how many years are passed? 2 years, correct? 1 and 2. So this 2 years total will become accumulated depreciation. So first year 15,000, second year 15,000 will become 30,000 accumulated depreciation. Okay. So here to calculate net book value, asset value. So first NBV is equal to what is the asset value? 1 lakh. And you are calculating depreciation for second year, which means take the total of previous year depreciations. So for second year,
15.
there is only one previous year, which is 15,000. So this will result net book value of how much? 85,000. Correct? Huh? Agree?
Yes.
So now depreciation is equal to NBV into 15 percentage. Okay. Depreciation will be calculated on net book value into 15 percentage. Now net book value is 15,000, sorry, 85,000 into 15% will result how much?
5.66 something.
No, 85,000 into 15 percentage.
Okay.
Let me put here. Is equal to 85,000 into 15 percentage. 12,750. Okay. 12,750 will be the second year depreciation. Clear? This is clear?
Yeah. Yes.
Now, the same logic, if you go to the third year depreciation, same logic. Net book value, find out the net book value. Net book value is equal to 1 lakh your asset value minus, if you are on the third year, you need to consider
2
previous 2
years.
years. So 15,000, or in short, you can take first year 15,000 minus second year value 12,750 will give you the net book value. Okay, that is equal to how much? It's equal to 1 lakh minus 15,000 minus 12,750.
22,000.
72,250. This will be your net book value. So depreciation will be net book value into 15 percentage. All these things are calculated automatically in SAP. You don't have to do all this, but you must know these basics. Only then you will find asset accounting interesting, and you will understand the logic behind asset accounting in SAP, because all these calculations are performed automatically by SAP system. So here 72,250 into 15 percentage. So how system will derive is equal to 72,250 into 15 percentage. How much you got?
10,836.
10,837.50. This will be the depreciation. Likewise, system will keep on calculating this percentage until the net book value becomes zero. Until net book value becomes zero, it keeps on applying the percentage irrespective of the years. Whether it takes 5 years, 10 years, 15 years, 20 years, it is not calculated, that is not counted, or that is not considered. So number of years is always based on until the asset is becoming zero, in case of straight line method and in case of WDV method. Clear?
Okay, one follow-up question here.
Yeah.
If you're taking the depreciation as a year wise in the net book value, if my depreciation, last depreciation until the asset value becomes zero, my
Hmm.
last year depreciation before the year complete, it was ended in between 8 months or 5 months.
Okay.
Let's the last year depreciation to become the
Okay.
asset value. The last year depreciation ended less than an year, like in five
Correct.
months was ended.
Correct.
Okay. So the system will show that this asset has already become zero, and the same principle applied to SLM what you explained.
Correct. It is the same principle, but in the last year there is always a mismatch. Like it may not be accurate, it may not be the full year, depending on the value left over in the asset. If according to 15 percentage, you may get some figure, right?
Correct.
But when you calculate that figure, asset value may be less than that. Then definitely you cannot overcharge the depreciation. So whatever the value is there, to that extent, you will write the asset, you will post the depreciation, and you will write off the asset, or you will close the asset.
We will remove it from the depreciation cycle.
Correct. The moment asset value becomes zero, it will get deactivated automatically.
Okay.
The asset value has become zero, asset is inactive, or asset is deactivated. So you cannot do any further transaction to it.
Okay.
Okay. So all these scenarios we will see in the system practically.
Okay.
And the last one, what we'll see, we'll try to calculate. This is very simple. Useful life method is very simple. Here also you need to consider the value of asset, which is 1 lakh. But here percentage is not going to play any role because it is based on the life. You need the life. What is the life of the asset?
10 years or 15 years.
Here it is written, right? Useful life is 5 years. You
5
need to
years.
write 5 years here. Take this in the middle. Right? It is 5 years. And the date is 1/5. Let me also take this in the middle. Now, annual depreciation here, value of asset divided by life of asset. It is what? Value of asset
divided by
value
life
of
of
asset,
asset.
life of asset. What is the value of asset?
1 lakh.
What is the
1
life of
lakh.
asset? 5 years. Correct? Huh? So in short,
5 years. Yeah.
correct, it is your
When you say value, you mean value of the asset purchased.
purchased. Correct. Whenever you tell
Start.
value of the asset, it is the purchase value. If you wanted to know the current value of the asset, that is represented as net book value of the asset.
Come again. Please come again.
Whenever we talk about value of the asset, we are talking about the original price of the asset or original value of the asset for which you
Okay.
purchased. And if you wanted to know the current value of the asset, we must use a term called NBV or net book value.
Okay. Book
Okay.
value.
So
Okay.
net book value is the current value after deducting the depreciations so far.
Current year net book value we are showcasing when someone
Correct.
asks about that. Okay.
Right. Now here,
Sir, I have a small idea.
yeah,
Like what discussed now, what is the regarding purchasing date and the value date? Uh, if I set some asset to purchase it, but some day, but we can't use that. We can we will use it like next month after 2 months. So like when you call this one mm, use date of asset now, using date of asset, we have like the activation of the asset,
correct,
annexation
correct,
of the asset.
right.
Uh,
So this 1 lakh divided by 5 here, correct? Huh? So it will be how much? 20?
25. 25.
20. Correct? Huh? This is right.
Yes.
So here the same thing, monthly depreciation based on months. Same logic here also. But here it will be 20,000 divided by
2.
12. So if you take 20,000 divided by 12, it will be this much. Let me round up. So this will be the value of asset. Asset depreciation for a particular month. Clear? And for the second year, if the life is UL, useful life, let me put UL here also, so that it will be a little. We don't call it UL method. That's why I did not write, but that's okay. If it is useful life method, it is based on what? Original value of the asset, which means the same logic again. So what will be the depreciation for the second year?
Original value of asset.
Correct? Second year depreciation will be same thing. Let me put this down. For second year depreciation, it is the same thing. 20,000, sorry, 1 lakh divided by 5, that is equal to 20,000. Because you are using useful life method. For the useful life method, it is the same logic as we used for the straight line method. Correct?
Yes.
So this is in short about your depreciation calculations by comparing the three at a time. Now what we will do, let us try to calculate depreciation in a systematic manner. This is clear, right? Calculation. Though you have any little here and there confusions, they will be clarified in the upcoming sessions. This is only to create an idea. So that whatever we have done in our academics, your basic asset accounting, depreciations, I'm just trying to recall them. So that you feel, yes, I know all these things. I heard somewhere all these things during my academics or graduation, intermediate, wherever. So you are able to recollect something, right? When you look at this. If not,
Uh,
that is still fine.
I
Now,
have one doubt, one
yes.
small doubt. When coming to assets, in legacy asset, I am
Hmm.
using straight line method or WBD method. But
Hmm.
when coming to SAP, my client wants to use useful life method. Is that
That
possible?
is not possible because your asset accounting is a legal requirement. It is
Correct.
controlled by the local governance, maybe your Income Tax Act or your Companies Act, your US GAAP or your IFRS. In short, your
Okay.
accounting principle which you are following. So that will never change. So
Okay.
irrespective of your system, whether you're using SAP, Oracle, or whatever the accounting application you're using, you must follow the same logic. Your
What about
depreciation
asset is transferred to another company code with
still
where it
it
still
is
has some life value?
it is not like that. Let's say if you're taking an asset of furniture, let us assume furniture is depreciated at 15% straight line method. In entire
Okay.
India, it has to be calculated like that only by every company.
Okay.
So it's a legal
But
requirement. So
I'm
company
saying that it
company
will completely move to another country.
that you will not move it, right? Then you'll have to write it as a sale. You cannot write it as a transfer. You have to sell
Okay.
it to the
Asset
other company
transfer is useful.
because the accounting principles and all are getting changed, right? That
Yes.
country will use a different law.
Correct.
So you'll have to purchase from that country and you have to sell from this country. It has to be recorded as an asset sale.
Okay. All this because we are using country level depreciation of accounts. Something.
Correct.
Okay.
It will follow a dedicated accounting principle to calculate the depreciations.
Okay.
So we'll be having multiple valuations for depreciation. For each requirement, you'll have to calculate a different figure.
Okay.
Okay. So here, let us take same example as above. Value of asset 1 lakh. Life, let's say 10 years this time. And depreciation at 15 percentage SLM. If you find percentage, do you need to consider the life or not?
No.
If you find percentage method for the depreciation, just ignore the life. It is only for confusing the purpose, right? Ignore the life and let's say depreciation or capitalization. Capitalization on 1/4/2021, which is from the beginning of the year. Once we are clear with this calculation, then we will bring the concept of capitalizing in the middle of the month, capitalizing in the middle of the year. All these things we will show. Okay, first let us go with full calculation, then we will see the different scenarios. If you purchase in the month of May, June, July, what will be the impact? If you are purchasing in the middle of the month, let's say 15th, 10th, 20th, 24th, how this will affect? And now what we need is, let me write year 1, 2, and so on. Let me write. I'm just taking some 10 years. Asset value, and let me take net book value. Depreciation per annum. Depreciation per month. Okay. And all this are there. Okay. Now asset value will remain constant, 1 lakh. So you're not adding, you're not modifying anything. So asset value remains constant. Net book value is dependent on the depreciation. So currently I'm not writing any net book value, or let me put this net book value here. Depreciation per annum, depreciation per month, and net book value. Okay. Now, what will be the first year depreciation? Now you know it is 15% straight line method. So how do I calculate the value here?
15, 10, 1 lakh into 40%.
Is equal to 1 lakh into 15%. Correct?
Yeah.
So monthly depreciation will be how much? 15,000 divided by 12. Currently we are
12.
going based on number of months in a year. So once this is clear, this is understood, then we'll bring the concept of based on number of days in a year. Okay, so that we'll see as another concept. Let's go with number of months currently to understand the logic first. Now, what will be the net book value? It is always your asset value minus depreciation per annum. Depreciation per annum. Now, let me also add one more field here. Let me add one more field. Accumulated depreciation, so that it will be clear for everyone. Now, accumulated depreciation is previous year depreciation. You are on which year currently?
First year.
First year. Do you have any previous year above 1?
No.
No, right? So accumulated depreciation for the first year will be what? 0. It will be 0 for the first year. I'll take nil. Is this clear for the first year calculation? Any doubt, anyone? Any question? So what we do, we have taken the year number 1. We have taken the asset value, which is the purchase value of 1 lakh. Depreciation per annum, we have considered this 1 lakh into 15% straight line method. So we applied 15% on this asset value. We got 15,000. And the depreciation per month, we simply divided this 1 year depreciation divided by 12 months. We got this figure. Accumulated depreciation is previous month's depreciation. So since you are on the first month, there is no accumulation. And net book value is like your asset value minus your depreciation. Sorry, asset value minus depreciation. Okay, clear? Or you can take 15,000 here. So I'll tell why I'm not taking 15,000. I'll show you in the second year. Then you'll understand the logic. Then I'll put the figure. Clear, right? So far, whatever the figures we updated here, is it clear, everyone? Any questions on the calculation part? Clear? Okay. Now, second year, asset value remains constant. Depreciation per annum, because it is a straight line method, you need to apply depreciation always on the asset value. So again, you will apply asset value into 15%.
15,000.
15,000. Now depreciation per month is same.
1250.
per annum divided by 12. Now this time accumulation will become current year depreciation plus previous year depreciation. What is current year depreciation?
Current year depreciation is 15,000.
What is
Previous
previous
year
year depreciation?
15,000.
15,000. So here I need to update 15,000. Okay, clear? Now just scroll up, you will get the logic now. Net book value is always asset value minus accumulated depreciation. Correct? If you wanted
Yes.
to get this net book value 85,000, you will have to take asset value and you have to deduct accumulated depreciation. For the first year, you will not have any accumulation. So initially I did not write. So straight away you are taking per year depreciation. So which is giving you correct net book value, which is fine for the first year. But when it comes to second year, if I don't consider this, or if I consider only previous year, 15,000, what will be the value I am getting? Asset
85,000.
value minus accumulated. Again 85,000, which is wrong, correct?
Yes.
I have used 2 years. So 2 years depreciation must be 30,000. My net book value cannot be 85, it must be 70. Agree with me?
Yes.
So you need to understand the logic. The second year, you will have to consider previous year depreciation also. If there is one previous year, 1 year depreciation. If there are 5 previous years total depreciation. Okay. Now let me put this in the middle. Right. So here, what will be the accumulated depreciation? Your
30,000.
current year depreciation plus previous year accumulation. Correct?
Yes.
Current year depreciation plus previous year accumulation, it has become 30,000. Accumulation means adding up to date. Yeah.
The concept is not clear to me.
Okay. To calculate the current value of the asset or net book value of the asset, you should always deduct the current year depreciation plus previous year depreciation. Let's say you are now in the first year. Or if you take the simple example of any kind of loan that you are taking, let's say you took a loan of 1 lakh. Okay, you have taken EMI for 5 years. Okay, and interest, let's say 15%. You're getting my point, right?
Yeah.
Now, first year you are paying some 15% interest and you are paying some principal amount,
Yes, sir.
right? So second year, when you are paying your interest and your principal amount should be accumulated, correct? Whatever the interest that you paid previous year and whatever the interest you are paying the current year, these two should be deducted from your total loan. Otherwise, your loan will never get cleared, right?
Yeah, correct.
Right. So first year you paid some EMI. Second year you are paying some another EMI. So after paying 2 EMIs, what should be your current outstanding? Your loan amount minus 2 EMI amount. Correct?
Hmm.
So assume this is your loan amount. This is your current EMI. This is your total EMI that you have paid. That is this will be the current outstanding. Still not clear?
Yeah, got it.
Not clear? Let me write down here. Let's say EMI 1 and EMI loan of, let's say, 1 lakh. First EMI you paid 15,000. Second EMI you paid 15,000. Now, what is your current outstanding? Current outstanding. How much you need to pay? Divya, you have borrowed 1 lakh. So far, you paid 2 EMIs. What is your
So
total outstanding now? You still
1
need
lakh
to pay 1
minus,
lakh?
no, 1 lakh minus 30,000. Am I correct?
Correct. Yes. Why 1 lakh minus 30,000? We have, because you need to consider all your payments which you have
Correct.
repaid. Similarly, in asset accounting, you have considered all the depreciations which you have utilized. Utilized in the sense you have used the asset. For the usage of asset, you will charge depreciation. If you have used 5 years, you need to decrease the 5 years depreciation. That will give you the net book value of the asset. Net book value of the asset is nothing but your current outstanding.
Okay, sir. Got it now.
Okay. Now, second year, this value is what you got, and you have to apply this percentage until you get net book value 0. Now, let me go to the third year. Third year, what will be the depreciation amount? Since it is a straight line method, it will be the same. Correct? Agree? Depreciation per month is also same. Now, what will be the accumulated depreciation? It is always current year depreciation plus previous year accumulation. 45,000. Net book value is your asset value minus accumulated depreciation. 55,000. Let me know if you are getting any confusion anywhere. Because if you understand this calculation, you will find it very easy, very interesting, the whole asset accounting. It's all based on this calculation only. Let's go to the fourth year. Same depreciation because you're on the straight line method. Accumulation will be current year depreciation plus previous year accumulation. 60,000. Net book value will be your asset value minus accumulated depreciation. Right? If I go to fifth year, same depreciation because you're using straight line method, same per month because it is a straight line method. What will be the accumulation? What two things I need to consider? I need to consider current year depreciation plus previous year accumulation. 75. Now, what will be the net book value? Asset value minus accumulated depreciation is 25. Now, if I go to sixth year, same per annum, same per month, accumulation will be current year depreciation plus previous year accumulation, right? Net book value will be 10,000 rupees. Now, if I go to this here, if I charge a 15% on this, I am getting 15,000. But do you have 15,000 net book value here?
No,
No, right? So, what is the maximum depreciation you can charge here on the asset?
10,000.
This is your delta depreciation. This is like your pro rata depreciation or delta calculation for the last year. If the asset value is 10,000, you cannot charge 15,000, right? Maximum you can deduct from the asset is 10,000. Agree?
Yeah.
So that is why the last year there might be a change like this. So here your per month depreciation will get changed, and your accumulated depreciation will be current year depreciation plus previous year accumulation, and the net book value will become 0. Until this value gets 0, you have to keep on applying this calculation. Got it? Until the net book value gets 0, you need to keep on applying the logic. If it is based on life, if it is based on straight line, based on WDV, whatever the method it is, until the net book value becomes 0, you need to keep on adding these values. Clear? So what I want everybody to do, this 10 years are not needed because your asset is becoming 0 in 7th year. Let this be still there. We'll round it off to 2 decimals.
Oh,
Right. Any questions in this table, in this calculation?
yeah, one follow-up question on this. When you said 10,000 per month, it is taking 833 instead of 1250 because the whole value is down to 10,000.
Your per month is always straightforward per annum divided by number of months. So this is dependent on this value. If this value is changing, this value is also changing.
So in this case, we don't see anywhere the depreciation is getting cancelled at half a year, like 6 months or 7 months or 8 months.
It will always segregate because system is always calculating depreciation for 12 months, right? Per year. Year is always consisting of 12 months.
Yes.
So it will always deduct, it will always calculate by dividing with 12 months.
Okay. For net book value, do we find any scenario like it was deducting and it was cut down into 5 months or 6 months of the last year?
No. In that case, you have to what you say, manually reduce the life of the asset. Something we have to do. Some manual corrections we have to do. Or you need
Okay.
to dispose the asset. You need to post manual depreciation. If you are using as usual on a daily basis, then this is how system will do it. If you want to cut down before end of the year, you want to use it within 6 months, then you'll have to post manual corrections to it. Manual entries are need to be done. Normally, for depreciation, no manual entry is allowed. So you're not supposed to post any manual entry for the depreciation. It is always automatic calculation. If you
Okay.
post
Then
any manual entry for the depreciation, system will, you cannot manipulate the system. It will always go by the logic. Same formula. If you write any manual entry, 1 rupee, that 1 rupee will result as a mismatch at the end of the year.
okay. One follow-up scenario for this. My
Yeah.
client is another requirement from my client where he's saying for first year the depreciation should be for 15 percentage, and the second
Mhm.
year for the second whole year the depreciation the asset value should become zero.
Okay.
Is that possible?
Yes. Yes, you can achieve this in the depreciation key configurations. You have different settings like base method, multi-level method, period control method to define the depreciation key. By doing these configurations, you can achieve the scenario whatever you have. You can tell calculate 10% in the first year and calculate 100% in the second year. So in the second year, system will eliminate the total value. It will charge everything as full depreciation.
Okay. Okay. Got
Okay,
it.
I'll be
Thank you.
giving you different scenarios in the asset accounting, which we will get in real time. Like how we will get, what is the use of your memo value. I don't want to make this asset 0. I want to leave 10 rupees here. So what you need to make some configuration called memo value. How memo value works, all these things I will be showing you practically. Okay, there are different scenarios which we are going to experiment with the asset accounting, but the prerequisite is this calculation. Like whatever we have seen so far, if you have basic understanding on this, in SAP, whatever the configuration we are doing, whatever the scenarios we are testing, it will be very easy for you to understand. This is very basic fundamental, which we consider as a prerequisite for understanding, for learning asset accounting in SAP. Okay. So what activity I want every one of you to do is take the same thing, and prepare a table, for 10-15 percentage WDV, and take the same values, prepare a table for uh, depreciation and useful life. I want you to prepare two tables like this. Like the way we've calculated here, in the same way, I want you to prepare this today so that we will verify this tomorrow. How far your understanding is there and whether your values are correct or not. We will calculate these two tables tomorrow in the tomorrow's session. Then you can check whether your calculated figures are right or wrong. Clear? Understood, right? What to do? Exactly the same thing you need to take. Just copy paste this table, right? Replace the numbers according to this scenario. You can do it, right? Right. All right then. So we'll connect tomorrow. Just revise this today. And before that, if we go to what we did today, just a quick recap of anybody who joined in the middle. So we started discussing from the asset accounting, and we noted down that asset accounting is a subledger accounting. This we did not discuss because we are yet to configure in SAP. So when we start SAP, then we will elaborate all these things. So as of now, remember, asset accounting is a subledger accounting. Asset master data will be integrated with general ledger with reconciliation account. So your asset accounting subledger and your general ledger GL will be connected or integrated by using a reconciliation account. So how this reconciliation account will get connected with the asset master record is what we will see when we do the configuration, where you'll have to understand what is the asset class, what is the account determination, what is the asset master record, how these are connected. Okay. And one more thing, each asset will get its value decreased by way of depreciation. So if you are using an asset, based on your usage, the life of the asset and the value of the asset will get decreased. Right? No asset will give you full service for 100 years or whatsoever, and no asset will increase its value except the land. Right? So if you eliminate the land, if you eliminate the land, whatever the asset that we have, it will deduct the value. It will get its value reduced by way of depreciation. And how the
Hello.
depreciation is getting calculated, hold on there. How depreciation is calculated and how the asset values are getting calculated is what we have to understand from the asset accounting. And for calculating the assets, and your assets are valuated by using different accounting approaches or different accounting principles, like you may use Companies Act, or you may use Income Tax Act, you may use IFRS, you may use US GAAP. Each accounting principle will have a different direction, will have a different guideline for calculating the depreciations. So considering these principles, considering these guidelines, you have to configure the system to bring the asset values in the system. So this is usually the requirement that comes in the real time. So this is like a country specific. In each country, there will be a separate local GAAP or the local accounting principle. According to that, you need to bring the asset calculations, and every company will have the corporate GAAP or group reporting. According to that also, you need to bring the asset values, which means each asset will have to be evaluated in two different directions. by following two different accounting principles. How that happens is what you are going to see. Maybe for one asset, you may have to calculate depreciation according to straight line. For the same asset, you may have to calculate the depreciation according to WDV method. So one asset will show two different values. How these things will happen if one asset is showing two different values? At the end of the year, there is a mismatch. One asset cannot show two depreciation figures. One asset cannot show two different net book values. And how these are adjusted? And how is the treatment in ECC for this? And how is the treatment in S4HANA for this? Because in S4HANA, there are major changes in asset accounting. So to understand S4HANA asset accounting changes, you must be very good at ECC asset accounting. Only then it is going to be very helpful when you're working on S4HANA implementation project or S4HANA migration project. So to understand any of these points, these calculations, whatever we have done, just as a rough draft, are very important, right? Just go through these scenarios, whatever we have written here. So you will be able to understand what we have done here. These calculations, if you understand, and you are good enough to understand the asset accounting, you will easily get the logics. You will easily understand how SAP is working in asset accounting. Because if you do the configuration, if you post an asset transaction, all the numbers, whatever we have done here, will be given to you by SAP itself. SAP will take care of all these calculations. It will give you the final figures. What you need to do is you just need to understand the logic and calculation how SAP is doing. Because your client will ask you that how this number has come. SAP is calculating wrong depreciation. My net book value is not coming correctly. Or when I'm selling the asset, when I'm transferring the asset, when I'm doing any kind of a transaction with the asset, number is not correct. Then you need to understand why your client is telling number is not correct and what number system is giving. So there is a mismatch. Who is correct? Whether SAP is correct or your client manual calculation is correct, you need to decide, right? To decide it, for first thing, you need to understand how asset accounting is working in SAP and how configuration is maintained, how his or your client is following the assets, how his calculation is happening, and where is the gap and where is the mismatch. All these things you have to understand. For that, basic accounting knowledge is mandatory and these calculations are must. Only then you will be very comfortable with asset accounting, where you can handle any kind of requirement, any kind of incidents, issues coming up from the asset accounting. Clear? All right, do this. And after doing this, just go through this cycle once, whatever we have done here. And after that, take out these two scenarios, calculate the figures. Okay, then you will get to know the calculation logics practically. How numbers are getting calculated, how net book value is coming, how per month depreciation is coming, how per annum depreciation is coming, how we are arriving at different calculations. You will get to know the logic, right? Okay, do this today. We'll continue these two calculations in the tomorrow's session.